Hey, are you here for the weekly market update?
Well, you're in the right spot. Hey, I'm Steven Saunders with Avenue Realty, and today I'm going to try something new with Cumulative.
We are going to try this camera that kind of follows me around. Also, it lets me, boom, go into a new view. Hopefully you like it. We're going to just try jumping through the charts. We're going to cover Bend, Redmond, and Sisters, but not in that order. We're going to cover Bend, Sisters, and Redmond. We're going to look at the Altos reports for the week. We're also going to look at some of the reports from MLS. Here we've got the Central Oregon, or MLS of Central Oregon, which is where all of us realtors put all of our listings, and that's a single source of truth for real estate information. Zillow, Redfin, and Realtor.com, they generally will pull from the MLS to report on their information. So let's get into it. We've got, let's start with Bend. This is the Altos report for Bend. And I want us to start by taking a look at this kind of market action index. It's this dashboard-esque looking metric that I've been reporting on for the last couple months. And I just want to talk a little bit about what it is. So it is a metric that gives an indication how balanced the market actually is. So on the low side here, 0 is indicating a total buyer's market. Well, what does that mean? It means that there's lots of inventory on the market, that interest rates are not really conducive to wanting to buy, and that buyers have lots of choice and very little competition. So it kind of, that has a lot of earmarks of what it sounds like in today's market. However, in Central Oregon, the supply side is still pretty tight. And we'll get to that. I've touched on it in previous episodes. But if it wasn't for the shrunken inventory and, smaller overall market, I have a feeling that this needle would be like somewhere up in here. And so then on the other side of this metric, you've got the seller's market. And this is what we can think of when it's really hot, still inventory is tight, interest rates are low, so everyone thinks it's a good time to buy. And it's a desirable place like Central Oregon is, especially for you buyers that are coming from Seattle or Portland or any of the big cities in California. A lot of you guys are looking to Central Oregon because it's beautiful, because it's a good value. And if you are looking, you should reach out to me. I can help you find a home, second home, or just uproot, move over here. We can hang out. So anyway, back to market action index. This metric is kind of a composite value. And what that means is it takes into account behind the scenes the inventory on the market and the absorption rate and the average days on market, and kind of like massages all those suckers together, right? And gives us a metric. It's like a barometer. And so we can see that we've held steady over month. We're in a slight seller's advantage, and we've been there the entire spring. And as we heated up into summer, we've really just kind of maintained slight seller's advantage. Now to get a little bit more information, and you can see if you go to the right of this report page, which any of you guys can go over to the Altos report page, altos.re, run your own report for your zip code. This information is public, so make the most of it. So if you go, look here on the right side, you've got pricing information on the first two columns. Here, the first line is list price, taking into account the entire inventory set that's in the Bend market. And then we've got new listings, which really looks at listings that have come on in the last week. And on down, we have these average days on market, which is a really important metric. It kind of relates strongly to the absorption rate, which is how well buyers and sellers are matching up in the market. We'll talk about that a little bit more in a second. Then we have these median days on market, which is looking at, well, the median as opposed to the average. And you can see how different the skewing occurs. So median is going to kind of put a little bit more weight into the newer listings that have come up because there's more activity. And of course, the average will account for those that have just kind of been hanging out on the market quite a bit more. And that over time shrinks as the total number of homes that that are on the market, because the longer they're on, presumably they're more likely to get off the market if they're adjusting themselves to meet market expectations. This is a really interesting figure, this 36% on a price decreased. So what's the story here? Well, we know that as the market changes, buyers negotiate the price down. What this is telling us is that 36% of homes, 36% of closed transactions are experiencing some kind of a price reduction. And we're going to look more into the stats for that, but that's just so you have that information. Really small, but also notable, is we got 2% increase. So usually this is something like for new builds or planned homes where buyers are, I mean, in the rare situation, they're bidding up, but usually it's some kind of additions are made sort of post getting into contract, and that's reflected by that 2%. Some people withdraw at different points in the market, and it's indicating that there is 5% of people are coming back to market, maybe with the same realtor, maybe with somebody younger, hungrier, and better. But anyway, it's 5% of people that gave it a go and now are trying to come back on the market. And really interesting for Bend is, look at that rent line. It's just been trending up. So this is, and by the way, all of these lines are 90 days. May 5th, so that's about 90 days. I believe, yeah, 90 days. So median rent has been climbing. It's up almost 20% since the beginning of May, which is pretty incredible. Okay, let's take a look at MLS data. All right, we're going to take a look at MLS data for Bend just to kind of follow on to this. Check it out. So I'm going to jump up here to this list. We've got up here, you can see we have 720 listings in Bend. Now, this is filtering for the week, but it's including all the actives, all the pendings, all the closed. I think I even included the withdrawn. Sure, let's check it out. We've got active with contingency or short, pending and closed. So there is no withdrawn, but you can see, oh, there's a map. This is cool. So this gives us, let's zoom in here, kind of where these 720 homes are clustering around. You see there's some down here at Sun River, even as far up north towards Sisters Plainview. Tumalo is right in there. Yeah, so we've got Tumalo here, and kind of the North Bend, but all of this is considered within the search. It accounts for these 721 listings. And you can see they range from like these, I don't even know what this is. This can't be right, but 27,000, 25,000. And then we get into the more like realistic, sort of the low end of Bend, which is going to be, 230,000 on all the way down to, there we go. It's still loading, but let's look at the stats. Maybe it'll be there. So this is going to summarize the data, the listings that result set that we have. So of those 720, 595 are active, 56 are pending, 71 closed, to make that 722. So, over 82% of the listings here are active ones. This is, absorption can be calculated based on this. I don't have it off the top of my head, but it's going to be looking at the new listings, which I believe is 72 this week. I'm looking at close, so we're absorption is still looking pretty good. Meaning that means that houses coming on the market and houses going off the market, really good relationship. There's like a flow of houses, and it generally means that that we're going to be maintaining that buyer and seller balance, which is kind of what contributes to this being so close to a balanced market. All right, so coming back over here. So let's take a look at, here we've got average on the top row, median on the second row. I'm not going to cover the other ones. I just want to highlight this median price reduction. So if you remember, we talked about the 36% of homes that experience a price reduction. Well, this is giving us an indication of how much are homes price reducing, right? Now, if they count that this is dealing with all of the homes across all of the days on market ranges, and that is significant, which we'll get to. But just note that 5%, like if a buyer's coming into the market thinking they're going to get their pound of flesh, kind of like not the real world that we live in today's real estate market. This, at best, you're looking at probably an 8%, 10% in a very distressed situation. So to keep that in mind, we can look here at the days on market. Median here is about a month and a half, and here we can see that the original list price and actual sale price only differ by like less than 2% on average. Okay, so we're also going to take a look here at, let's scroll on down. You can see we've got price per square foot. Median is 394 up to 427. These seem to be moving pretty well. And then we're going to come down to, all right, so we are going to talk now about days on market and sold list ratios. What does this mean? So 0 to 30 days, month 1, 31 to 60 days, month 2, 61 to 90 days, month 3, and so on. So we've got these 5 buckets. And what this is saying is what percentage of the total transactions are falling within this 0 to 30 days. And of those homes, what is the difference between the original list price and what the final sales price was? So just know we're only looking at closed homes, 69, 26, whatever. This is really only going to be dealing with a subset of that 720. But we can see that in that first bucket, in that first month, you're pretty much getting full price. So if you're pricing it right and the market's responding, you are going to sell that home within the 30 days. And it steadily goes down. The punchline is once you get past 90 days, that's when sellers are really going to start succumbing to, greater downward price pressure and greater requests for concessions and all that kind of stuff. So it does matter. It's really important that your realtor helps you as a seller, helps you understand where to price your home, where the market's going, and to understand that these factors and how they relate to current market psychology. And then here, I just want to quickly touch on this cumulative days on market. So we're looking at cumulative days on market for Ben homes. So we're looking at, again, that set of closed homes for the period. And we still have these buckets, 1, 2, 3, 4, 5. Now, 65 listings, which accounted for 51.8%. They closed within the 30 days. Now, roughly 20% of listings closed within 2 months. So what does that combine? That's a little over 70% closed within the first 2 months of being on market. And then getting close to 80%, 82% closed within 3 months. The remaining 20 just drug out. And 10%, have been on the market for over 5 months. And that's where you're just like, I don't know, you're in the twilight zone. You're waiting for somebody to come by. Probably those are the ones that get withdrawn. And it's those homes that get relegated to that, as time kind of goes on, that are adding to that inventory and really become stale in the truest sense of the word. Nobody's thinking about them. They get lowball offers. It's not pretty. All right, so we are continuing on. We are going to head to look at the sisters market. Similar format. We're going to take a look at the Altos report. It has a lot of really good high-level stats. And of course, if you have any questions about this, feel free to reach out. You want to take a look at any properties on the market. You need a virtual set of eyes. Be glad to check out the house for you, create some content specifically and custom for you. All right, let's get into it. So jumping into sisters, what do we've got? Well, it's a little bit more of a buyer's market than in Bend. Not by much. I mean, in the grand scheme of things, it's 2 points out of a 100 scale. But it does indicate that either inventory is increasing at a faster rate, which is actually what I think is going on, and I'm going to touch on that. And that, the average days on market or days on market is sort of lengthening over time, which I see here as well. So let's talk about it. Well, just to kind of repeat, if you're watching only the sister segment of this, the market action index is a composite metric. It's on a scale of 0 to 100, and it tells us how balanced the market is. Now, behind the scenes, it's looking at the inventory, days on market, and the absorption rate of homes that are coming into the market and getting absorbed by new buyers. Looking at all of those factors to calculate how balanced the market is. And currently, it's pretty close to a stalemate. So what do we have? We have median list price across all listings seems to be trending down. Let's take a look at this here. So we've got median list price started 90 days ago, was almost 1.5 million. Now we're pushing 920,000. It's kind of steadily come down. It just means that that the higher priced options came on the market, cleared, new stuff that's come on is hanging around in that range. And you'll see here, like this is also kind of bringing it down, right? So, you know, two months ago or 3 months ago, we had homes that were pushing $1 million of coming on the market. Well, now we've kind of like steadily kind of crept back into, we had some peaks, but we're settling down into the $700,000, $800,000 range. This week, we're seeing close to $700,000. Price per square foot still is a pretty healthy $487 per square foot. I do remember when that was a bit lower earlier this year when I had one of my clients listing. And so this is pretty good. It means that the value is still being seen in sisters. But I want to transition to days on market. Both median and average days on market have been steadily increasing. Again, the average days on market it really takes into account more of the entire inventory, whereas the median days on market is going to really be skewed more towards the listings that have come on in more recent weeks, just because listings that come on the market and sell is just about, we'll see, but it's usually around 50 to 60% of the homes, if they're priced right, they come on and come off the market. And whatever's left is what's influencing that average. The average of the market is that, you know, as that set of listings grows slowly over time. And so this days on market kind of skews to account for all of those. Really interesting is that this last week, price decreases affected 47% of transactions. That's crazy. That means almost 50% of homes on the market are getting prices negotiated down. So it'll be interesting to see what the stats are for that out of MLS. Inventory has been steadily creeping up. It's up around 70, and median rent is, I think, has been actually relatively consistent. This looks like a downtrend, but you know, a couple $100 isn't it, actually that is kind of a big deal. That's almost 10%. So rent has come down a little bit in sisters. So it's going up in Bend, going down in sisters. All right, let's take a look at MLS. So these are the homes for the sisters market. We are looking at 115 total listings that are either active, that are pending, or that have closed. And you can see here, this is the little map of where they're at. We'll take a look at the stats. So we've got 91 active. I guess there's a little bit of a discrepancy because here it says we've got 68. So my MLS view is accounting for the greater sisters area, which is going to include Black Butte Ranch. It's going to include probably Plainview and out in Cloverdale. So a little bit of a wider scope on my MLS view, which I think is a little bit more accurate. So we'll stick with this. 13 went pending last week, 11 closed. Of the new listings that came on, you don't have that off the top of my head, but I think it was actually 4 this week. So a lot more closed than came on. That actually could be good for absorption rate over next week, but it's really not an off week. We really have to kind of keep track of the trend over time. Well, let's take a look here. The average price reduction in sisters, and average and median are pretty close together. We're looking at almost 7% price reduction. And you can see that the homes that this is affecting are those that have been on close to between 2 months and 3 months. So we'll probably see below that those homes that are selling within 30 days aren't dealing with that, but something to keep in mind. End result is homes are closing, you know, with a 10%, well, 7 to 8% discount off of the original list price. Cost per square foot is still showing up as a value. So if you're using that as kind of your broad stroke, that'll give you a sense of where the market is. You know, anywhere between 430, and 470 is going to be kind of the sweet spot for what you can expect to get for cost per square foot. So let's take a look here. We've got homes that have been selling in the first 30 days, and sisters are actually getting above the original list. Now, again, I speculate that a lot of those are going to be the new builds that are happening in Hayden Homes that are still kind of in their last wave of closings. And we actually have a client that just got one, and they did end up getting extra features, which raised the original price. So now that it's closed, that's being reflected in that figure. But if you jump over to, so this is a little bit hard to see homes that are not in those new developments. What they're getting, they're probably getting close to full list. Homes that are 30 to 60 days on market, you can see are experiencing some pretty big discounts, between 7.5% and 12%. And it continues to go on that way. All right, let's take a look at cumulative days on market. So we've got 6 homes that sold within the first 30 days of being on market, 6 homes that sold within 2 months, 3 days within the first 3 months, and then you've got, and this is going to jump to column 5, 4 of the homes, roughly 17% of homes and sisters that were on market for almost 4.5 months. All right, so we are in the home stretch. This has been kind of a long one, but we are going to talk about Redmond today. Redmond is the last market. We're going to just really breeze through the Altos reports since I've talked quite a bit about it on both the Sisters and Bend. If you want to get, the nitty gritty, I've kind of dove into what the different metrics mean. So I'm not going to do that this time. I'm just going to make it more quick. Okay, here we go. So let's take a look at Redmond Altos report. This has been a hotter market, still kind of in the slight seller's advantage. Hasn't really moved for the last, as I've been covering this for now going on 3 months. And it's really held month over month. So just a quick reminder, the market action index is this composite figure that takes into account inventory, days on market, absorption rate, distills all that down into a barometer type value that tells us how balanced the market is. And we are looking at something that is telling us that sellers are still having a slight advantage in that market. It could just be because it's sort of down market compared to Bend and Sisters. So it's a little bit of a different demographic, but things seem to be moving pretty well there. All right, let's take a look over at median list price. So median list price for Redmond is $625,000. The median list price of new homes is $640,000. So those are pretty tight, and you can see the trend lines there are kind of staying in tandem with one another. Cost per square foot in Redmond is probably one of the best values in Central Oregon at about $313 a square foot. You can compare that with the range that's sort of the mid 400s in both Bend and Sisters. Now the average days on market, again, this accounts for the entire inventory set, is at around 78 days on market. Now the median days on market, which is skewed more towards newer listings, is 42 days on market. Interestingly, a whopping 42% of transactions in Redmond are closing with price reductions. That's pretty huge, although it's maybe not as stunning as it seems, because generally what I've seen is that the price reductions in Redmond are much smaller margins, usually in that 1% to 2% range. Whereas what we saw in Sisters over the last couple of weeks is, discounts that are in the 7 to 10%. So it's quite a bit of a different market. Inventory is, as Bend and Sisters, has been steadily creeping up. So, that would indicate that absorption rate, although still in a seller's market, has been kind of slowly is adding ingredients to create more of a buyer's market. We'll have to keep an eye on that. Rent seems to be holding pretty steady at about $2,500 a month on average. All right, let's take a look at MLS data. So we're going to just jump right into the stats for the Redmond market. So of the homes we've talked about, 109 listings that are the current inventory. And now those which are active, pending, and closed. Now 44 of those 109 listings are active, 36 here are pending, 31 closed. And let's take a look at the details. So the mean price reduction is, as I mentioned before, small percentages. So we're looking at 3%, right? Roughly $15,000 off of that list price. Average, which is accounting for the entire listing set, it is more skewed towards those homes that have been on the market longer. They're still pretty close at 2.5% off the list. Dollar price is a little higher, but it looks like those homes may be at a higher list price, indicating that Redmond is a more liquid market for that down market segment. Really cool to see that the average days on market for Redmond is right around that month. So even these homes that are 30 to 40 days on market, those are the ones that are still getting that price reduction, which is really interesting because the average days on market for both Sisters and Bend is longer than that. I mean, 1 month is pretty much guaranteed to get full price in those other markets. Not so in Redmond. Means homes that are getting that higher sold to original list ratio are selling even sooner, like in the first few weeks of being on market. It's pretty cool to see. You can see here the cost per square foot, as we mentioned, is the low side of 313, and the mean of about 322. Let's just kind of keep that as a broad stroke if you are looking to buy, or if you're pricing to sell. You want to kind of keep that in mind. It's always advisable to get a realtor that can analyze the market with you, and if you need help with that, please feel free to reach out. I'd love to help you get your hands around where the market is and where you need to be in that cohort that sells quickly and not waiting on market for 90 days. Okay, coming on down, let's take a look at the buckets of days on market. So you can see here, we've got 5 buckets, 0 to 30, 31 to 60, 2 months, 3 months, 4 months, 5 months. Now, 50% of these listings that closed are sold within the first month. So we take 75% combined, sold within 2 months, and 82% sold within 3 months. So again, roughly 18% have been just relegated to, I feel it's fair to say, stale data or stale listings. They just kind of like fall off the map. You don't want to get stuck there. As you can see here, this is where you start to really kind of give away quite a bit. Here at the 121 plus days, you can expect to have a price reduction of at least 7%. That just goes along with the perception of being kind of a stale listing. So you want to do everything you can to kind of stay at the front side of all of that. And again, if you need any help coming to market, or if you're looking to buy, if you have been waiting on the sidelines and you've got your powder ready to go, can help you navigate the market and put in a really strong offer for the home that you want. All right, with that said, thank you so much for watching. This was a little long, new format. I'm trying to do a screencast, so give me feedback on what you think. Do you like looking at the charts as I talk about them, or do you prefer having a black background and just more of a talk video? I'd love to know. I'm here for you, and wherever you are, have a good one. Talk to you soon. Bye. Oh, and I forgot to mention, I am here with the amazing, look at this, Laura Blossie's here.
Hey, everyone.
She snuck in as I was doing the market update report, but it's always a privilege. I get to work with her day in, day out. She's a master in the Central Oregon market. She backs up a lot of what I do, and it's just incredible to work with. So with that said, now I am going to drop off, and hope that you have an amazing week. And please reach out with any questions, any comments. Both Laura and I are here to help you. Bye.